Everyone says AI will change the world, and they're probably right. But what if the real danger we're facing in 2025 isn't the technology at all? What if the true threat is something far older? Something that has destroyed fortunes, collapsed markets, and fooled some of the smartest investors in history? What if the real danger is that we're repeating the exact same psychological mistake that triggered the dot-com crash, but this time on a scale the world has never seen? Because in his latest commentary, legendary investor Howard Marks, a man known for predicting the dot-com meltdown, the housing crash, and multiple credit cycles, has issued a warning that today's AI boom is not just a tech trend, but a full-blown market mood, powerful enough to distort prices far beyond the AI sector itself. The question isn't whether AI will change everything. It will. The real question is, are we already living inside the biggest bubble since 2000? Let's break down what Howard Marks sees, and why it's so uncomfortable. Howard Marks isn't a sensationalist. He doesn't make predictions for attention. He studies something much deeper, human behavior in markets. And in his newest commentary, Marks says something subtle, but dangerous. Valuations today are lofty, but not nutty. On the surface, it sounds harmless. But here's the hidden warning. The dot-com bubble didn't start as nutty. It gradually became nutty. It began with optimism, excitement, and a technological breakthrough everyone knew would be big. That's exactly the psychological environment we are in today. The concern isn't the numbers. The concern is the mood, the optimism, the fear of missing out, and the widespread belief that this time the winners are obvious. Marks has seen this movie before. In 1999, everyone was right about one thing: the internet would change the world. And it did. But almost every early internet stock still collapsed. Not because the technology was wrong, but because investors assumed they already knew the winners. Most were wrong. Pets.com, Webvan, eToys, BOO.com, hundreds of others. The world transformed, but shareholder value evaporated. Marks says the exact same dynamic is happening today. Yes, AI will change the world. Yes, it will increase productivity. Yes, it will create trillions in value. But nobody knows which companies will actually capture that value. It could be chip makers. It could be cloud platforms. It could be data owners. It could be software companies. Or it could be startups that don't even exist yet. Knowing the revolution is real does not mean you know who wins the revolution. That is where bubbles begin. Here's where Howard Marks flips the entire AI narrative upside down. Everyone is watching NVIDIA. Everyone debates whether Microsoft or Amazon is overvalued. Everyone talks about the Magnificent Seven. But Marks says, the real bubble may not be in the 7 companies everyone watches, but in the 493 companies nobody is watching. Here is the nuclear stat you should put on screen. S&P 500, excluding Magnificent Seven, now trades at 22 times forward earnings, higher than any point during the dot-com bubble, except the final 4 months before the crash. Let that sink in. AI hype isn't just lifting AI stocks, it's lifting everything. Even boring companies, slow companies, low-growth companies, companies with no AI strategy at all. This is not an AI bubble. This is an everything bubble. And now, here's the pause moment. Pause the video right now. When was the last time boring companies were this expensive? While the entire world talked only about AI, this is the psychological core of the bubble. NVIDIA doesn't need to crash for the market to collapse. All it takes is a slight shift in AI expectations, or a slowdown in earnings growth, and the inflated valuations of the other 493 companies have nothing holding them up. The dot-com bubble was a tech bubble. The AI cycle is becoming a market-wide bubble. That's the part no one notices, except Howard Marks. Marks emphasizes something most investors overlook. Technology can transform the world without making investors rich. It happened with railroads, automobiles, airlines, early computing, steel, and the entire internet. The world became better, but competition wiped out profits. As Warren Buffett puts it bluntly, efficiencies tend to flow to consumers, not shareholders. AI may reduce costs everywhere, but if every company benefits equally, then no one company captures extraordinary profits. The narrative is huge, the expectations are huge, and unrealistic expectations are the fuel of bubbles. This might be Howard Marks' most important insight. The moment markets feel safest is when they are actually most dangerous. In 1996, Alan Greenspan warned about irrational exuberance. People laughed. The bubble didn't burst until 2000. The warning wasn't wrong. It was early. Marx believes we're in that same early warning phase now. Not mania, not madness, but unquestioned optimism. That's where cycles peak quietly. People stop worrying. Investors fear missing out more than losing money. Companies chase AI narratives even without business cases. Prices float away from fundamentals. Everyone assumes the winners are obvious. This is how bubbles are born. Slowly at first, then suddenly. Here's where Marx breaks from the crowd. He isn't telling investors to panic. He isn't predicting a crash. He isn't saying sell everything. He's doing something far more interesting. He is quietly buying what everyone else hates. While the world piles into AI megacaps at record valuations, Marx is positioning into energy undervalued, cash-rich, financials ignored, beaten down, small caps, cheapest relative to large caps in 20-plus years, 10-year treasuries yielding 4.5 to 5%. Sounds boring, but that's the entire point. These were the exact categories that crushed the Nasdaq. After the dot-com bubble burst in 2000, Marx lives by one rule: when everyone agrees, the opportunity is gone. Right now, everyone agrees AI is the only thing that matters. That's precisely why Marx is looking elsewhere. So is the AI bubble bigger than dot-com? According to Howard Marks, we're not in the crash phase. We're not in the insanity phase. But we are deep into the optimism phase. The phase just before the expensive mistakes appear. And here's the hard truth. The last time the market felt this safe, the S&P 500 fell 49% and took 7 years to recover. AI will absolutely change the world. There's no debate about that. But the bubble is not in the technology. The bubble is in the psychology around the technology. We've seen this story before. Optimism becomes expectation. Expectation becomes entitlement. And entitlement becomes collapse. The question isn't, will AI reshape the world? It will. The real question is, when the bill for all this optimism finally comes due, will you still have any money left?